The chair recognizes Mr. Van Hollen for 5 minutes.
Thank you, Madam Chair. Thank you and the ranking members, and good to be on the subcommittee. Thank all of you for your testimony. Sorry I'm running late. It was just on the Senate floor. There's a lot going on today, as you and my colleagues know. And I'm, coming to this with an open mind. We're all, over many years, been trying to really understand these currencies and stablecoins in particular. And I know the Genius Act has been proposed as one way forward on stablecoins. Mr. Masad, just a couple questions, and you may have tread this territory a little bit, but if you could take a little deeper dive, both in terms of the vetting of stablecoin issuers under this proposal, whether it has the checks and safeguards that you think are necessary to protect consumers. And the other issue would be if for some reason one of these issuers were to go belly up and you had to resolve claims. My understanding is it's a bankruptcy type procedure as opposed to some of the procedures we currently have for people who need to, claim lost monies from a banking loss or something. Could you zero in on those and any other concerns you have as we approach this?
Certainly, Senator. Thank you for the question. On the vetting, I think the Genius Act has some of the provisions you'd want in there for vetting, but it's not comprehensive enough. Senator Smith asked the question about the fitness of management. That's not in there. I think we just need a broader, framework of criteria. The McHenry-Waters proposal, I think, has that in terms of vetting. But the other aspect of vetting is who does it. Is it done at the federal level or is it done at the state level? And, that's where we are trying to strike a balance. I think the approach in the Genius Act tries to do that by saying the state framework has to be substantially similar to the federal one, meaning the criteria and so forth, and the issuer can't have a market cap larger than $10 billion. I think that notion of a trigger that puts you into the federal bucket, if you will, doesn't allow a stablecoin issuer to go to the state is a good one, but I would strengthen it in a few ways. I would probably lower that threshold. Europe has a threshold for its significant e-money tokens of 5 billion euros. And I would still insist on some minimal federal standards that the states have to follow. On the bankruptcy issue, you're right that today what would happen in the absence of any special provisions is a normal corporate bankruptcy would apply. You'd have the automatic stay, which would mean token holders would not get their money until the conclusion of that process. They would also be pari passu with other unsecured creditors. The Genius Act at least says they have a priority claim, but it doesn't deal with that timing issue. And so I would prefer to see some sort of dedicated bankruptcy process or resolution process that's fast, both from the standpoint of the interest of holders, but also to prevent any sort of collateral damage. If you've got a situation with a large stablecoin issuer and you're going through a very lengthy process before the holders get their money, you could have consequential defaults too. We saw that even with a small Terra, algorithmic stablecoin. So ideally, you'd have a dedicated process. At minimum, you'd want to say, you have segregation of those reserves. They're held in trust for the benefit of the holders. Ms. Masari, argued that they should be available to be given to the holders right away. Those sorts of concepts I think you could look at. But truthfully, a dedicated process could work and should be much simpler than a bank because the business model of these entities is going to be fairly simple.
I appreciate that. Just to take us off track a little bit from stablecoins, but to deal with digital assets, much has been said and written about meme coins. You have been somebody who supports responsible innovation among digital assets. Of course, the president issued a meme coin, which I understand has gotten about $100 million worth. Do you have concerns that creates all sorts of conflict of interest problems? And I'm interested in other people's thoughts on that as well in closing.
Absolutely, Senator. I've said publicly this was plainly wrong. I think it's a black eye for crypto. I think it's brazen corruption. And I'm disappointed that more people in the crypto industry, as well as, frankly, members of Congress, have not said similar things.
I appreciate that. I just ask each of the witnesses whether you share Mr. Massad's view on that.
So taking a bigger step back, and I say this in my written testimony as well, we've seen some of the worst scams and frauds and grifts using crypto. And that is, I agree, a black eye in the industry. It hurts those of us trying to build something that has real value and that has real utility. I actually think legislation that clarifies the legal framework for crypto markets, for stablecoins, will help to fight against the sort of worst of the bad behavior, because it will provide clear lines and will let law enforcement and regulators easily distinguish between the good and the bad, and that has to be the right answer.
Worst of the bad behavior, gentlemen?
Senator, with respect to the Memecoin market, I think facts are important here. So take, for example, our platform at Kraken. We have over 300 assets listed. Less than 10% of those are meme coins. Meme coins are not a new phenomenon. Dogecoin, I think, is over 10 years old, maybe around there. So this is not a new thing. It's trending now. I think part of the reason there's been a focus on meme coins is because there's been regulatory uncertainty in the United States to create much of anything else, right? We've had developers that are looking to build, protocols and technology that have many different use cases. It's clear that meme coins are not securities, and thus, I think they're trending at the moment. Our role as a marketplace, however, is to ensure whatever's traded on our market, right? We run these assets through rigorous due diligence tests, cybersecurity tests, legal tests, and make sure everyone that is participating in our market is subject to KYC and sanctions. So, I think, again, putting this in perspective, yes, it's trending now, but there's a much bigger ecosystem here that we need to focus on.
Thank you. Mr. Cohen?
Yeah, I would concur in that view. This is open technology, Senator, at the end of the day, and people around the world will do with it as they will. I think it's really important that we focus on the use cases that drive adoption around the world, and I strongly support that.
Thank you, Madam Chair.
Mr. Warner.
Well, I'm sorry.